Maybe you feel a tinge of envy when you see certain company stocks soar and you did not buy a single share. Or perhaps you've heard of some early birds in the Bitcoin game who are now living a life of luxury. The urges can become uncontrollable when you hear about these investing fairy tales. The feeling is normal, valid, and so true. But remember that these things did not come on a silver platter. These people took risks to get rewards. When you're a beginner in the investing field, it's foolish to go all in. In investing, experience counts, but a lot of people think that intuition will make them successful. ETFs and index funds aren't too exciting, but they have a long track record of outshining the market. If you're the type of person who checks the prices every day and struggles to decide whether to buy or sell with a small amount of money, you won't get very far in the business. We've said it before, many stocks are boring and they don't make waves. All they do is move in one direction, one slow day at a time. But beneath all this, there's the mathematical power they call the compound interest that allows them to reach far and wide. Take a look at this. If you had $5,000 today that you put into an index fund that grows steadily at 6% each year, it's going to grow to $50,000 in 40 years. Time is indeed money. Each year that you don't optimize your investments means smaller returns in the future. Those who invest early can usually retire early. Those who invest later may have to work longer to get their dream retirement condition. Investing in stocks? We would love to know your thoughts, so feel free to share them with us in the comments below. I hope you enjoyed it, and don't forget to subscribe to our channel on YouTube to get more free financial educative videos.